hit April, May. But we're nowhere near negative enough in order to rule out a very large reversal and to continue on and make new highs. We're just not at that point yet. Tops are generally made, we generally make double tops and they sort of roll over. So if we are actually at a top, we'll start to see this entire thing fail and we'll start to make new lows. But we're just not at that point yet. We've basically been in a range for the entire year, for all of 2010. So generally when you're in a range, it's some type of distribution that's taking place. So either retail is coming back in and, selling, institutional side selling back to retail, and they're essentially just getting out of the long positions from back in March, starting to take short positions or whatever the case may be. Or if this is in fact not the top since the March 9th lows, what we're seeing is a lot of sector rotation and people just basically trying to rejuggle and reposition themselves for the next move higher. We don't know where we're at yet. We don't know what side of that continuum we're on until it actually happens. And the way that we'll see when it happens is because based on price and volume, and there's no other way around that. I was actually thinking about this earlier today too, as far as indicators. And I was thinking about a website that does a really good job. They've got a good online forum and things, and they kind of got their start as far as making all these indicators and stuff. But indicators don't really do anything. They don't really work. There's only one indicator that I think actually has some merit, and it doesn't really have merit necessarily on the S&P, but it has merit in other markets and other derivatives. If you create your own derivatives and trade your own, if you trade spreads and things like that, the MACD can be very beneficial as far as gauging momentum. But I think it works best on not even the actual underlying asset that you're trading. I think it works best on derivatives itself. That's another topic for another day. But the only real indicator as far as what's taking place is simply price and volume to figure out what's going on. So, I mean, there's so many different indicators that people can use to try to get an idea, to try to get a jump on what's going on and what's going to happen and things like that. But I don't know. I just don't. I don't get it. I don't see. I mean, everything itself is based on either price and volume. If the price and volume is the root of what everything else is based on, there's no way to do better than what your root is. So to me, it just makes sense to actually focus on the root as far as what price and volume is doing and learn how to interpret that so that you have an understanding as far as potential direction for things based on what the institutional side is doing. So that's just my thought on indicators in general. But anyway, I don't need to bore you all with all that. Let's take a look at crude oil and see what's... Hang on 2 seconds. I had some calls coming back in. Crude oil. This is pretty cool because I'm a big fan. I'm a car guy, right? So I want to have crude oil be as cheap as possible. But we're seeing something very interesting take place. Back here, I think we talked about this actually. I think we got this in a video as far as demand coming back through during this period. And this bar right here, this is that's a clear sign that you've got demand coming back through, and sure enough we did. But now check this out. We had demand come back through. We had, everything was met with supply. And you can see the supply coming back in because it's pushing these bars down. Every time price would come back up, it'd smack it right back down in this range, and it did it twice. And from there we fell. Now, the cool thing about that is if you take a look at the volume, you've got a total decline in volume overall on the buy side. And that was easily met with supply coming back in. We had a reduction in price. We had an institutional side come back in on this day, started to take long positions. Basically when they're taking long positions, what they're doing is they're taking supply out of the market. So that's confirmed with these next 2 days because the supply that's coming through is not enough to really do much as far as getting price to become discounted, to continue this downtrend going. So that's the entire idea as far as when the institutional side comes through, they're taking supply out. Or if they're selling, they're taking demand out of the marketplace, that it goes back down in whatever direction is in their favor. So price is already marked down. They come back in, take supply out, which is then replaced with demand. We have quite a bit of demand coming back up. Now look, we've got a bunch of high volume bars when they're already marked up, which means that since they're marked up already, it's getting sold into. And if you take a look at the range as far as how wide these bars are during the day, the volatility completely dropped off. That means that you're getting in a big fight with buyers and sellers up at these levels. So there's a lot of buyers coming back in, but it's met with supply, and the reason why it is because you've got higher volume and very low range on these daily bars, which means that there's basically a handoff taking place as far as demand coming through is being replaced with supply. And then when the demand runs out at these elevated levels, it sells off. It's all replaced with supply, and price gets discounted. Now, with all of this selling that's been taking place, it's important to note, though, that we are on this upward trend, essentially, of higher prices in crude. Now, we've had, this is almost very similar to the S&P as far as we've had these big volume, high volume sell-off days here. But when volume is this high, that means that there's always an institutional side taking the opposite side of this trade, right? So we're at this area where Friday was an extremely low volume day, and we didn't really make anything substantial for new lows. Now, that doesn't mean this thing could, possibly not fall off the page and, go back to 70 or whatever the case may be. But it just means that supply that's coming through as of right now is very limited. So what we would be looking for here is we would definitely be looking for a bounce. We'd be looking for the institutional side to come back through and start to bid this back up. Again, that will only be confirmed with price and volume as that happens. But it is important to note, though, that we are now discounted relative to where we've come from. Supply is now running out. And the reason why we know supply is running out is because our volume is very low. It was a down day on Friday. However, we're not making substantial new lows, which is something that you would be looking for in order to confirm that there was a giant amount of supply coming through to overcome all the demand, such as these days that we saw Thursday and even Wednesday. So we would be looking for a bounce at some point early next week. Whether this goes lower or not, we won't know in the near term until the size comes back through. But that's what you should be looking for, since we are discounted, and we are discounted after we've seen a substantial amount of volume come through. So that's a look at crude. Let's take a look at the euro-dollar currency and see where we're at here. Similar type of story. This is actually a very good demonstration as far as price and volume. We've talked about this all the way down as far as when people are covering back up, institutions are buying, then when we run out of demand, it'd sell back off, rinse, wash, repeat all day long until we hit our low. Now take a look at these lows right here. Look at how low the volume is on these days when price is trying to make a new low. I mean, this is a great example of an end of a trend, essentially. We've had a huge markdown in price, which was met with people trying to sell in on these days here. And the price closed relatively low on the day, but there was no supply coming through. So if there's no supply coming through at all, I mean, you can clearly see it. There's nothing coming through. That's a clear sign that this entire trend is hit the end of the rope, basically. And then whatever supply was left is now being replaced by demand, which is why we now had this rally that's taken place. So what is good to see is, here's another example of the top, essentially. We saw this day, and this day right here, signaled the market top. It was a relatively higher volume day than the previous. We made a new high. The next day, looks like we tried to test that high but couldn't even do it, and it happened on very, very low volume, which means that there's no demand coming through at this point in time. So once there's no demand, what happens is it's replaced with supply. Now here is the supply coming back through, and if you take a look, the volume is relatively elevated as well. But the volume being elevated means that there are certainly people already covering up. If they've already got short positions, if they've already sold into this, they're starting to cover this up already. So we would also be looking for a bounce at some point in this. However, I think it will be a little bit further out versus the S&P and crude. And the reason being is because we're seeing some very bearish bars in here where we are constantly making new lows and closing on the lows of the session, which means that all day long, for the 23 hours that Globex is open, it's getting sold into, and it's getting sold into all the way up until the close of the Globex session, which means that there's a considerable amount of sellers coming through here. We would be looking for the exact same thing. We'd be looking for either a total absence of volume once we mark down, because that would signal that buyers are able at that point to overcome supply and come back through, or what we're going to look for is something similar to what we saw on crude, where we get just a huge flush out all the people who are in here and make a new low, and then it's immediately replaced with demand that comes back through and bids price back up. We'd be looking for that as well. But for right now, we're not there. So there's really no indication quite yet that this is something to get back into. But certainly, keep an eye out for that. So we're kind of all set up in the exact same type of pattern across the board as far as in the commodities, currencies, index futures, and things like that. So, welcome back to the BitHitter Global Capital Market Recap. If you guys have any questions, feel free to shoot me an email, info@bithitter.com. I will do my best to start getting the pre-market summaries out to you guys and get everyone back in the swing of things. Hopefully we can get some good volatility coming back through, and we'll make a ton of money. And I wish you guys the best.